Home prices in 20 U.S. cities rose in December for a seventh consecutive month. The S&P Case-Shiller Home Price Index rose just over 0.3%, which was more than anticipated. And right now we are joined by one of the index authors, Robert Shiller, professor, Yale University Cowles Foundation. Welcome to you, Professor. It's so great to have you on the program today.
My pleasure.
So your December index seems to suggest that U.S. housing is stabilizing. Would you agree with that characterization?
It's going up at about 4% a year, greater than the reasonable inflation.
So rebounding is a better way to describe the current state of the U.S. housing market.
It has been rebounding since April. It's been sharp in some cities. So, I mean, San Francisco's up over 15%.
So what is driving that? Why is that?
Well, it certainly has something to do with the revival of confidence. We just saw the bad news this morning about confidence, but
exactly.
It's been very much on the upbound since the beginning of, really since the Obama administration came in.
What about this concern about foreclosures? Would you say foreclosures are playing less of a role in depressing property value?
Well, it would look like that, but we still have a lot of foreclosures coming. We still have this huge shadow inventory. Right now, it's kind of speculative. I think a lot of people are coming in buying because they think that the recession has just ended. They were starting to do that even before the recession showed such clear signs. People want to get in first, and they think a lot of people have high expectations for home prices, and not everyone. It was differences of opinion.
I believe you've been asked this before, right? But could this shadow inventory cause a U-turn in the direction you're seeing for home prices? Could it?
Yes, it could. In
depress
fact,
prices, and by how much? How much of a threat is this shadow inventory causing?
I can't exactly quantify it, except to say that my company, Macro Markets, is working on creating over-the-counter swaps and forwards for home prices. We've been talking to a lot of big investors, and we're getting an indication now that the market for forwards would probably clear at a -6 to 10% home price change over the next 2 years. That means there's a lot of people worrying about price falls in that range.
Professor Lori talked about foreclosures, but what are some of the other hurdles that could jeopardize what seems to be a recovery in the housing market?
Well, the hurdles are numerous because they relate to the whole economy and the issue of a possible double dip.
Yeah.
We saw the Greek debt crisis, we saw Dubai World. These are stories that get some people worried, and we don't know. There could be other stories, but state governments could be in trouble. News, who knows what the news will be. But we also have the fact that the government is supporting the housing market through supporting Fannie and Freddie, through first time an existing homebuyer tax credit, and is scheduled to stop these things. And to start raising rates.
Without that stimulative effect, what does the housing market look like?
That is the big question, because the rebound in the housing market since April seems to be related to these efforts and seems to be related to a general faith that we're getting out of this crisis. And let's hope it keeps going. But I know that there are lots of people worrying about a possible double dip and a possible turnaround down.
A lot of people worried about mortgage rates, too, building on the theme you hit on with the Fed wrapping up its purchase program, right, of mortgage-backed securities. Okay, so this is by no means a story chapter that's come to a close. Professor Shiller, thank you so much for joining us with this latest bit of detail, and we'll see where we go from here.